Good day, dear subscribers of my YouTube channel. In this video, I will be talking about many different topics today because they are all important. Firstly, the fact that the Canadian Central Bank has changed the interest rate. Secondly, what this means for our economy. Thirdly, how the situation with tariffs and the war between us and America will affect our economy, the interest rates, and real estate. Fourth, if your mortgage is coming up for renewal, what should you do? How to behave? What interest rate to choose? What is beneficial, what is not, where to take a variable rate, whether to take a fixed rate. If you have debts, if you have credit cards, and you don't know what to do with them, how to get rid of debts, in this video, I will touch on all these topics. Why? Because I believe it is very important at this moment not to make a mistake, as any wrong move can cost a lot of money in the future, or it might even result in losing everything. So, without any delay, let's discuss these important topics. Firstly, the Bank of Canada changed the interest rate just a couple of weeks ago. It seemed that there would be no change in the interest rate. And the reason the interest rate changed is, of course, our economic situation. I also want to introduce you to our new government. The Liberal government has chosen a new Prime Minister. Honestly, nothing will change. It's the same person, just under a different name. Therefore, I hope that elections will be held soon, and then our Canadian people will decide who is ultimately in power. In any case, our new Prime Minister is Musk Corny. Secondly, we have another change. We also have a new Bank of Canada governor. I present to you our new Bank of Canada governor. This is Mr. Donald Trump. Ultimately, he decides what happens with our interest rates, not our Canadian Bank of Canada governor. If you want to know what will happen with interest rates in the future, you need to listen very carefully and actively to what Trump says, what his plans are, and how it will affect our Canadian economy. Honestly, in defense of our Canadian Central Bank, I must say that it is, of course, very difficult for them right now. Why? Because we are in a bit of a catch-22 situation. On one hand, if these tariffs, if these additional duties are imposed, we will have a huge economic problem. Factories will start closing, people will begin losing their jobs. And since this will be happening, the Canadian Central Bank, of course, will have to cut interest rates at a rapid pace. But, on the other hand, due to these tariffs that the Americans are imposing against us, and we are imposing against the Americans, it cannot help but affect prices. We will experience a significant increase in prices, and it can be said, depending of course on what the tariffs will apply to, we will see a significant change in prices. And of course, only in one direction. That direction is that everything will become more expensive. If everything becomes more expensive, we will start experiencing inflation. The Canadian Central Bank, as I have always said, has the primary goal of stopping inflation. Therefore, on one hand, we will have a big problem, an economic one, and the interest rate would need to be cut at a tremendous speed. On the other hand, we will start experiencing inflation. The interest rate should rise, and I consider this point very important. I would like to convey today to the listeners of my channel that it is very important to act in a timely manner right now. The solution might be to switch to a floating interest rate in a timely manner, but also to switch to a fixed interest rate in a timely manner. I don't think anyone will resist me and say that if Donald Trump wants to achieve something, he won't achieve it. But that's a guarantee, as you saw yesterday, for example. Yes, Doug Ford announced that he is imposing a 25% tariff on the electricity we send to America. Well, by the end of the day, that's all. He already changed it because Donald Trump made a strong threat. Tomorrow, there will be a discussion on this topic. What do I mean by this? The American economy is 16 times stronger than ours. The American currency is the world currency. As of today, I don't know how this will end or how it will change, but even here it seems Trump is working in such a way that most likely the American currency will remain the world currency for many years. Therefore, if we try to compete against this economy, a strong economy one could say, a global economy, on one hand, and on the other hand, with a country that has the world currency, we will lose this game. Therefore, I believe that the most important point is that we need to sit down with them at the negotiating table, maybe even if they impose, of course, unfairly. Today, for instance, they have imposed additional tariffs on aluminum and steel. Of course, this is unfair. But what can we do if we are working against a country whose economy is 16 times stronger than ours? I think in this situation, we just need to calm down, swallow it, and look for other channels, maybe talk to the Europeans. But this is not so quick. You can't change it from today to tomorrow. Therefore, it's important to stay grounded. Let's say not to show off. It won't lead to anything. Even as I mentioned in the previous video, dark terminated the contract with Musk for Starlink. Internet. Now, many people who live somewhere out in the rural areas will not be able to have fast internet. So who did he punish? Firstly, he punished his own people. Secondly, I don't know how true this is, but this morning I read in some news that for terminating this contract, Ontario will now have a penalty, around 40 million. For a project that was 100 million, they exited this contract, terminated it. Now the penalty will be 40 million. What did we actually gain? Who did we punish? Maybe even Elon Musk will profit from this. I almost said Elon Trump, but actually you can call him that. Elon Trump, because Trump and Musk, they collaborate very, very well and with each other. I think that if Trump wants to achieve something, he will achieve it. To the point that he is willing to ignore the fact that the stock market is simply collapsing. You could say if you look at what's happening in the bond market, well, there was a serious collapse. And that's why some clients often ask me, well, what would you advise? Is it worth investing in stocks, mutual funds, and so on? I always say, well, it's a risky business. I do it. But you have to understand that if you invest in such a high-risk equity business like stocks, you can expect that you might also lose money. But if you really plan to invest the stock market, I think now is a good time. Because basically, if you look at what the rich and the poor do, the rich invest when everything is down, when there's a real collapse, like now. And then, when everything looks good, they might sell at that moment. Normal people, let's say, typically do the opposite. When everything crashes, they panic and sell. And when everything is growing and thriving, that's when they start investing. I think if you really want to invest in the stock market, maybe now wouldn't be a bad time. I think one very important factor is why Trump is even willing to go so far as to allow a slight recession. He even officially predicts that a recession might happen. He also spoke and warned that there is likely to be turbulence in the stock market. For him, it is very important before the midterms, as there will be re-elections in 2 years, there will be the Senate and the House. And for him, it's important to have control. Right now, he has full control. He understands perfectly well that if there are elections and he doesn't perform well politically, Americans won't like it. He will simply lose the House and lose the Senate, then his hands will be tied. That's why he is currently creating such a mess, literally turning everything upside down, engaging on 10 fronts. It might be better to fix one front first, then the second, third, fourth. He is working on 10 fronts. He wants to achieve his goals as quickly as possible. And then within 6 months, everything will more or less calm down. I am sure that the stock market will also go up again and will be higher than it was before the small collapse. That's why it's important for him to achieve as much as possible at the beginning of these 2 years, so that later when it gets closer, by midterm, everything will be beautiful, people will be satisfied, inflation under control, stock market, beautiful, plenty of jobs, everything is great. And not only will he not lose the House or the Senate, but on the contrary, he will gain even more votes. I have some colleagues who say, look at what's happening in America. It's the end of America. I'll be honest with you, I think we need to worry, not America, but Canada. We really have problems. You know, what's most interesting, we don't even need to wait for any tariffs, any additional duties. Just the talk of us possibly having additional duties already impacts our economy. Right now, companies have stopped hiring new people because they are just waiting. I think in the near future, we might not feel it so quickly, because many companies, before this tariff war starts, are quickly purchasing products. They are buying up metal and so on to still manage to buy everything before it starts, the war, as far as tariffs are concerned. And thanks to this, of course, our economy will look pretty good. Even Tesla, for example, Canada is removing the promotion where you get additional money if you buy a Tesla. So what happened? Just record sales of Tesla. So, for a short time, we might not notice it. But long term, these talks about potentially imposing additional tariffs on us are already impacting our economy, already affecting people who want to buy homes, who are planning to do something. Everyone is on hold. They are cautious. No, maybe we better not spend the money. We'll wait. Maybe we won't go on vacation or something else. And this will once again hit our economy, which is already not in a very good state. I think the next blow to our economy will be on April 2nd. As you know, Trump enacted a law that all countries with tariffs against American goods will automatically receive now the same tariff from America. And we, of course, in Canada are not exactly saints either. We have a huge tariff on American dairy products. And there are many products on which we have tariffs, but the Americans do not have all tariffs against us. On April 2nd, this will automatically come into effect. I don't know how this will end. We know that Trump wants to somehow, in some way, try to take over Canada. Well, he certainly won't take over by war, but he can corner us economically, which could lead to something like that happening. Honestly, I don't think it will come to that. For now, it will seriously hit our economies. And maybe it will indeed happen that one province will be added to America. Serious talks are already underway about a movement in Alberta. And they are planning, maybe, to join America. Well, if it comes to that, then of course we will have a problem. Because the government in British Columbia now wants to introduce additional tariffs for trucks bringing products from America, which theoretically, now Trump, in order to bring his products into his own country, he will have to pay tariffs. He will not like that at all. If Alberta joins America, there will be a perfect route where he can bring all his goods to where they are supposed to go. And then maybe he will also impose tariffs. Everything going from east to west or from west to east will go through Alberta and tariffs will have to be paid. That would be a disaster. It might be good for Alberta, but depending on how people see it, some want to be part of America, others do not. But I think that in the end, from an economic standpoint, of course, it wouldn't be bad for the people living in Alberta. From a purely patriotic standpoint, well, people have different opinions. Some want to be Americans while others do not. In any case, this cannot be allowed. Therefore, we need to sit down at the negotiating table. How will this whole situation affect the interest rate? Of course, if additional tariffs on our goods are indeed imposed by April 2nd, then the bank will be forced to cut the interest rate. And not far off, in April, there is already the next meeting, and our new bank governor, Donald Trump, will decide what will happen with our interest rates here. Will we go up or will we go down? How will this affect real estate? Of course, for now, it's like this. Everything is unusual every minute. I constantly monitor, of course, what is happening. X is generally the most ideal platform, I believe. Everything is urgent there, and everything is without any filters. You can read it as it is. Well, you have to be careful, of course. There's also a lot of fake information there. But if you know who to follow, who to listen to, and which videos to watch, then actually X is a very good platform. So I don't know how this will end, but one thing is clear. The activity in the market will, of course, not be very good because people will be afraid. On the other hand, another problem arises here. If people start getting laid off, they will begin to have financial problems. Many people are already having problems now with finances. If we look at the Equifax report, there are very large debts. People are struggling with credit cards and are late with payments. The financial situation for people is not very pretty. In the end, I think long term, I'm actually sure that all this will calm down. And a strong America is very good for us. Whether we are part of America or not, that's another topic. But a strong America is still good for us because they need Canada. Yes, it is not a strong country, but we have all the natural resources. We have everything that America needs. Therefore, it's not very beneficial to quarrel with us. For the Americans, but in the short term, we can, of course, suffer. But I think in the end, all of this will calm down. But it might happen that you lose your job. You lost your mortgage, you might lose your house. Therefore, I believe as long as everything is going well for you, especially if you have, let's say, not a very good rate, maybe you got it at 5% or higher at the time, then it might make sense to refinance now. First, get rid of all your credit cards. Second, switch to a better rate. Automatically, you will have a better monthly payment. I hope you did your mortgage with us because that means a guarantee that you have a mortgage with a bank that has small penalties. And you don't have to worry that it will be like RBC, TD, or Scotia where you save 10,000 but lose plus 20. No, if you did your mortgage with us, you can count on having a bank with small penalties. And now, my employees are actively working on this. We are calling people for whom it makes sense to break the mortgage, pay a small penalty. We add it to the mortgage, maybe add all the loans the client has, various credit cards, lines of credit, car loans, to simply free them from these financial problems. Call us. We will check how beneficial it will be for you and transfer you to a good rate. Because the rates on the market are not bad right now. What will they be? Long term, it's hard to say. At the end of the video, I will talk about what I currently advise and what I think will happen with the rates. But at the moment, there was just one point for me, important. If you're in such a situation and you might lose your job, maybe you think that everything is great today with your employer, plenty of work. This can change from today to tomorrow. Therefore, it might make sense to switch to a better option, a better rate, and get rid of debts. And then you can sleep peacefully. And even if you get fired, you won't have such a big financial problem that you might lose your home or get caught in a debt spiral. Now, regarding interest rates, what do I recommend today? It's very difficult to recommend something, but I think that a floating rate, a variable rate, would be a good option today. But then there are very important points that you not overlook. I mentioned at the beginning that the Canadian Central Bank has a problem. On one hand, if we have economic problems, they will lower the rate. On the other hand, if everything becomes more expensive due to these tariffs, inflation will rise, and the Bank of Canada will ignore everything else. Believe me, they will ignore everything, and will only focus on inflation. This means that interest rates will go up again, so it's important if you choose a floating rate to monitor the market. That's my job. If you work with us, it's our job. We will take care of it, but still, watch my videos, read my posts. You will know when it might be the right time to switch to a fixed rate. It's also very important that we choose a floating rate with a bank that has low penalties. There's no difference with a floating rate. Whether you terminate with one bank, RBC, or any other bank, the penalty will always be the same. But when you decide to switch to a fixed rate, which could be in a year or two, I don't know when, then you can switch without penalties only with the bank where you have the floating rate. And that's where you fall into this trap. That's why I believe it's very important, whether it's a floating or fixed rate, to choose the right bank from the start. So when the right moment comes, even if, let's say, all these predictions don't come and you switch to a fixed rate and then it turns out you need to break it and get something better, you can always do this with banks that have small penalties. This is our job, and the percentage of all mortgages that my employees handle, we do everything with banks that have small penalties. Now, I would like to make one comment regarding short-term fixed rates. Until recently, this might have been a good option. Now, it might turn out if you do it, I don't know. For 3 years, many banks offer. And we also have very good options. For 3 years, you might lose twice. Firstly, if the floating rate quickly goes down, you will miss this chance because the floating rate went down, you locked in for 3 years, and you'll have to stay where you are. When these 3 years end, the floating rate might have already gone up, and the interest rates have increased, and you will lose again because you are now taking new rates that are higher in the market. But up to today, my predictive track record is actually not bad. I think if you are one of those who don't like risk, there's nothing wrong with that. But then, maybe there's no point in doing 3 years. Maybe it's better to do 5 years. At least, yes, the floating rate will go down, the floating rate will go up, but you've been through all of this when it went down. Well, you lose a little, and when it goes up, you still have the same percentage that you received. I think that if they are closed, then maybe it makes sense to do 5-year closed terms, but only with banks that have small penalties. Because if it turns out to be a mistake, we can change this rate for you with minimal losses. If it's with RBC, TD, Scotiabank, CIBC, ABC, you'll be stuck there for the next 5 years. What would I like to say in conclusion? I think it makes sense for you, especially if you have high interest rates, to reconsider this. Because if we make changes to the interest rates, your monthly payment decreases because the rates are lower. Even if we add this penalty, of course, if you're with RBC, TD, and Scotiabank, you'll have to stay there. But if you're with banks that have small penalties, then we'll break your deal, add the penalty to your mortgage, and prove it to you. For example, you had a 5-year term and 3 years are left. We might lose, I'll just roughly say $5,000, but we'll save $15,000 over the next 3 years. Well, in this case, there's no need to think long. It has to be done. And secondly, of course, we can relieve you of all your debts. And thirdly, your monthly payment will be lower. And now, in a situation where we are in there might be problems with work. You might even lose your job. I think these factors are very important. And it's important to do this before these problems arise for you. Because if you are already fired, then no one can help you anymore. If you received a letter stating that you are being laid off because banks call your workplace to find out, then we can't help you either. Therefore, I advise you, if you are in such a situation, or even just to check how beneficial or not it is for you to do this, call us. My employees do this every day. They have a lot of experience. I have people who have been working for many years. For instance, Andre has been here for 15 years, Jason for 17 years, Alberta for 13 years, Matthias for 13 years. In general, they have a lot of experience, and we will make sure that it is beneficial for you. We have no interest in letting the bank profit from you, but we have a huge interest in ensuring you are satisfied and recommend us to your friends and acquaintances. That's all for today. I wish you all the very best from the bottom of my heart. Health, blessings, and may you not lose your job under any circumstances. May everything be wonderful for you. Until next time in the virtual world. This was Victor Sheffer with you.
Thank you for watching this video. We hope you found it useful. We would be glad if you share it with your friends and acquaintances.
Subscribe to us, Facebook, Financial Group, and on YouTube, Versus Solutions.
If you are interested in applying for a mortgage or need insurance, fill out the form on our website visissolutions.ca.
Please contact us by phone at 1-877-282-0904 or write to us at safe@atvssolutions.ca.
Joy life today, and we will indeed create a successful tomorrow for you.